In this video, we're going to demonstrate how Forex Source subscribers made money during a tradable sentiment shift involving the dovish turn by the BOE this week. Now, the move we're going to be looking at is this one here on the pound Australian dollar pair. So let's break this down and see exactly how we could have predicted this and caught this move using our market commentary. Now, just before we begin, don't forget to hit the button to subscribe or follow us so that you're always notified every time that we release a new video. So firstly, we need to understand the context or the baseline surrounding this pair before the actual move took place. Now for that, we can go into the Forex Source terminal on the 17th of January, and we released our dominant currency sentiment report for the day, as well as our current sentiment drivers for each of the major currency pairs. Now in these two reports, we saw that the current short-term baseline for the Australian dollar was to the upside, given some good Chinese economic data, which was released a bit earlier in that session, which caused an overall risk on sentiment in the markets. Now, furthermore, we had a lot of focus on the pound and especially important economic data out of the UK due to the increase in dovish rhetoric from the BOE and the market's increased expectations of a possible rate cut by the BOE later in that month. So based on this, we knew that the Australian dollar was being driven higher on the day by the risk zone, and we also knew that the big negative deviation, negative deviation in important UK data would increase rate cut probabilities and should also see weakness across the board in the pound. Now, once the baseline was in place, the next step was to identify the type of breaking news that would basically generate the biggest market moving shift. Now for that, also in the terminal, we can go to the video commentary section for the 17th of January. And in this video commentary section, we released a video, this one highlighting that there was some upside seen in the pound prior to the retail sales numbers that was due a little bit later that morning. But there was no clear catalyst for that move to the upside in the pound. And in this video, we also explained that given the current risk zone at that time, it would be a good opportunity for us to sell the pound Aussie pair if there was any substantial miss in the UK retail sales data. So now all we basically needed was the trigger. In other words, the sentiment shift that we identified ahead of time to actually take place, and that was the retail sales event that was due a little bit later in that session. So also in the terminal later on the 17th of January, we had the release of UK retail sales, which basically showed a significant miss in the numbers and saw a very big immediate negative reaction in the pound across the board. Looking at the chart, we can see that there was that immediate reaction to the downside of about 40 pips. Now, after this announcement, even if you missed that first initial move in that first minute, this is a 1 minute chart, by the way, you had about 5 minutes to basically digest this information, realize that this was a tradable sentiment shift, and then pull the trigger on the trade. Even if you waited for 5 minutes more and took off the trade at the very next psychological level, price level, which was the 189, you still could have banked an easy 50 pips on that overall move to the downside. So if you are interested in learning more about how our market commentary can help you interpret news and fundamental analysis and turn that into profitable trades like this, click the link below and check out Forex Source. We thank you for watching, and please post your questions or comments below this video, because we do read all of them and actually base our future videos on the questions that you guys ask.